What's going on, guys? Peter Zane coming at you via Markify and Benzinga with your market outlook via the options for the week of August 12th here. Let's take a look at what happened last week. Relatively same levels as we played off the previous week before. Break of 170 brought it to lower levels towards 169, but the complex wasn't very clean at getting there. I wouldn't say that this is really smart money pushing things lower. It's more like sloppy retail money trying to short a dull market kind of look. Short opportunities have not been the best, nor are long opportunities out there. Even while we are peeling lower, the VIX is still sitting at all-time lows. So you've got this really weird disjoint area where you have volatility still sitting at lows, and the stock market is slowly peeling off lower. And when you have something like that happening, usually this is time to stay on the sidelines. Even for option sellers out there, there's not enough volatility to sell. On top of that, for guys who want to short, you can't really short during the day. You have to really just take a conviction for saying, oh, if something rips to highs, I'm going to be willing to short it there without even really taking a look at the tape. Unfortunately, this isn't the best risk reward. Overall, I would say relax in cash. If you want to play, make sure that if you're going short, just sell the rips. If you're playing long, buy the dips, and go for an overnight move. And overall, the complex, it's looking kind of bearish. All the banks, Goldman Sachs, JP Morgan, Bank of America, they all ended on lows from the previous week. On top of that, the technology companies are just kind of all over the place. You got Amazon kind of like flat. You've got Apple going on lows, you've got Google going on lows, and then you had Priceline earnings that came out, busted all the way through towards 998, almost through the attempt to 1,000, and of course faded lower. And actually for the next week, we're looking for the same thing, guys. Overall, there's no catalyst. All the big Wall Street players are probably in the Hamptons just relaxing, and we're probably looking at this for the next anywhere between 1.5 weeks to 2 weeks. If you want to play any levels, just watch your SPY 169. The obvious levels are 168 and 167. Again, pay attention to your complex. Make sure that if you're going for a short, that you have some things under the hood that look like shorts. If they don't look like a good short, don't go after it. If you're playing via the options, I would play with at-the-money options since we're at such low volatility levels, and you want to catch a nice move on a stock. That's totally fine. Overall, personally, I would either be playing stock and scalping it, taking a very, very small positions overnight for swings into the longs or shorts, with the same process of shorting the rips or buying the dips. But right now, bears and bulls are getting kind of pillaged all over the place. A lot of traders cannot trade this type of environment because the tape does not exist for very long. It'll be good for 30 minutes and poof, there's no momentum left to either direction. So again, guys, careful of the chop. Mind the levels and use your risk reward systems. Enjoy the summer too, guys. It's not your job to try to make money every single day, but it's your job to put risk on at the right times in the market environments that are good for you. So if this is not your environment, if you're not a good range trader, just relax. Wait for the momentum to come back in and get back in there. All right, guys.